Hey traders, welcome to the Monday US equity game plan. So we look at the S&P minis, we can see that there's kind of a variety of options as what we're looking at. If we had to continue with the way we were looking at things originally, where we were looking at this as an A, B, C, D, E, you can see that our downside target has been met. And it looks like, well, we went to touch on the 0.786 and looks like we're returning back to the upside now. The other alternative, which is obviously an exact opposite viewpoint, is that this was actually the end of the D wave, and this little last surge up was actually an E wave, and now we are now sitting with an A, B, C, D, E, and we still need that impulse down, which will be the start of a move much deeper, in my opinion, if that is the case. As you can see, we got up to this kind of 38.50 level, and then we've seen quite a strong pullback today. It's hard to say where we're going. There's no real structure, like I said, on the higher time frames. All we know is when we look at the higher time frames, we can see how, say, on the daily, we're sitting right on top of what looks as potential head and shoulders structure. And we know from the higher time frames that, or even the weekly and the monthly, we're sitting at very extended levels. A good example of this is we go to, say, the weekly, and we put in a linear regression tool we change the period to 520, being 520 weeks, which is 10 years. So sitting at 10 years out of the log chart, and you can see just how extended out of the linear regression curve we are. So we are still really overbought, even on different technicals than the ones we usually use, like linear regression. So I still believe we have further downside to come. I believe what we saw now or on Friday was pretty much a perfect bull trap. We were rallying off the lows. You have major unprofessional, or how do you want to say, major retail funds flowing into equities the last kind of few months. They just got another stimulus check, and you can just see how this could very easily, and also you have a lot of complacency around the Fed, where everyone just believes every little dip is going to be bought because the Fed is going to cause the market to rally. And it's very possible that what we're seeing here is a little bit of a bull trap, and we can just see further downside to come. And I see a lot of this in a lot of the individual equities. This still looks very bearish to me. I don't see any reason to change our view that what we are seeing is the start of a deeper drawdown in the market. So I'll be very cautious getting long equities, be very cautious buying this dip. For me to really get involved in the equity market at the moment, I would really have to see this little move down develop into something a little bit more corrective on the lower time frame. So we need to be here for the first few days of the week at least, probably Wednesday at the very least, something along those lines, before I got interested in buying any equity, or at least S&P indices. So yeah, I'm very, very cautious at the moment, and I suggest a lot of caution on your part as well. Looking at triple Q, very much along the same lines. Really, if you're looking at what we're seeing here, it's more of a head and shoulders and a retest of the neckline more than anything else. So again, if we're looking to get long, I want to see a rally to the upside and a corrective structure that says we're going to go higher from here, a lower degree corrective structure. Right now, I'm not interested in any longs without confirmation of that move. And as you can see, the NASDAQ is now opening in negative territory. Pre-market is down, and I can expect, or we can expect, further downside in tech. Dow Jones Industrial, kind of the same thing. In reality, if we look at it, what I'm seeing is more of a lower degree corrective structure. It's by no means the cleanest corrective structure I've ever seen. It's very short. Our B wave is very messy, very choppy, which is actually ideal, but it's not the kind of choppiness that I wanted or I would want in a correction. But if it is going to play out as this little ABC correction, what we're really seeing is the first corrective structure for further downside. So again, DJI looking really wary now. We have to be really cautious. buying into the Dow Jones. And again, I would wait for a corrective structure on the lower timeframes before I got interested in anything in terms of a decent long trade. The Russell's a little bit different. The Russell's actually showing a little bit of a decent structure. We have a decent impulse in. We have a very clean A, B, C, D, E. We have a nice push from there down towards the lows and a pretty strong rally from there. So it's possible what we're seeing is a turn. And if you are going to get long an index, if you're looking to get long, funny enough, the Russell seems to be the one that looks the best. But that being said, when we go to the weeklies, just keep in mind where we're sitting on this weekly chart. It's absolutely ridiculous where we're sitting right now in terms of lack of correction on a weekly chart. We've gone up 136% on the Russell without a decent pullback in terms of a corrective structure. So be very, very cautious here if you are looking to get long. Stocks don't always go up. That is not true. There will come a point where you're going to get hurt, you're going to get burnt, and it's time to be really, really cautious. And again, if we have to take a look at the actual structure we're looking at here, I'm seeing a pretty good left shoulder, I'm seeing a really good head, and I'm seeing the formation or the start of a right shoulder, a bull trap where you buy the dip expecting further upside, and all of a sudden you find yourself deep underwater because the market's fallen out beneath you. So very, very cautious here. Facebook, kind of remaining in our corrective structure. We still have a very good, nice looking, it's very messy, but it looks a lot like an ABCDE as a very central structure. What we can expect moving forward is a pull down towards this 240 region, a push higher, and that'll be a nice ABC corrective running flat for continuation to the downside. I maintain my bearish viewpoint on Facebook and most of the other tech stocks. Apple, similar scenario, although Apple probably has done enough, at least in the short term, for downside move. As you can see, our A wave and our C wave are now sitting at the right levels. We're touching on the 0.786. So technically speaking, we've done enough. I just don't think I can see a scenario where tech really starts to rally again unless yields start to rally, which is a possibility when you look at TLT. So if you do see TLT starting to turn to the upside, getting into Apple, not such a bad idea because you do have a really nice running flat and you should see a pretty decent return, at the very least a return to the highs. But again, very, very cautious. I still suspect further downside here. But we'll be keeping an eye on it just to see how things develop moving forward. Amazon is another one, looks like it's ready to rally. But again, there's nothing to say we don't see a deeper pullback here. So just be cautious what you're doing in this region. It's really thin ice that we're skating on here in terms of the levels we're sitting on the higher time frame. So you have to be really cautious of your longs. Another thing we need to watch out for is that we do not have any alternation on these lower time frame moves, which means we can expect probably a bull rally and then or another bull trap and then a reverse down before we get a decent wave higher. So a lot of caution needs to be had in tech stocks at the moment. That viewpoint hasn't changed. Microsoft, kind of same thing, higher time frame. We still have a lot of downside to come in my view, but there's still a scenario that we have this as a central structure and more upside to come. So we're kind of sitting in a little bit of a and or scenario where you could have a continuation to the upside and it would make complete sense. Or you could have a 30% drop to the downside and would make complete sense. So you have to be really cautious of where you're sitting here. And maybe an option straddle is not the worst thing to think about. Maybe a longer term option straddle could play out in your favor, especially with these conditions. But yeah, like I said, right now, I'm really cautious in these tech stocks in finding a direction. It's been a bit challenging at the moment. So let's see how things play out. And yeah, like I said, if you really want to get into this market, if you really want to play, a straddle is not such a bad idea. Netflix, little move off the highs, still looking pretty good. We're looking at this as a bit of a triangle, but as you can see, we've popped low and then jumped higher. And to me, it's not such a bad ABC corrective structure. It's not the cleanest ever, especially with this middle center structure, but it's not too bad. There's also the possibility, again, it's kind of both sides. What if this was an ABC, impulse down, we've done enough to the downside. As you can see, Fibonacci line speaking, impulse down, A, B, C, impulse down, touching on the 0.786, and we start to get some legs to the upside. That's absolutely a possibility. But there's also the possibility that what we have is a broader running flat. We're going to get one more pop higher and then a fall from there. So I guess in terms of playing tech, maybe going long Netflix is an opportunity, because you may be able to get out of it if it does turn to the downside, and we do see that bearish outlook playing out. Something along those lines, in which case if you got in here, saw a rally to 540, you'd be able to get out for a small profit and maybe look at going short, switching that position around. And if the long manages to hold up and we have this scenario playing out, you'll definitely be in the money and probably go and test the highs at 594. So again, it's a mixed bag. It's really difficult to read the market at the moment. There's a lot of messy structures, especially in tech. I think a lot of people are looking to buy this dip. A lot of people don't trust the dip. So we have that kind of mixed bag in the market, mixed signals in the market, and that's what's making it difficult. We'll have to see who wins out in that situation. Google's one that actually looks like it's ready for the short trade, because we have a decent move off the top. We have a really nice ABCDE corrective structure. We were looking at this wave here, which actually lengthened up, but doesn't change the structure itself, which means we have a decent downside to come. And as you can see, pre-market, we're sitting nice and low or nice and down below those highs. And we should see continued momentum to the downside. And we definitely still have this very big gap open here, which I think should close. Structure-wise, that move makes sense to close that gap. So this could be a really nice short from this region down towards that gap at 194, somewhere in that region. AMD at Mars Micro Devices, our ABCDE played out really nicely. We have an impulse off the highs, ABCDE, and a pretty decent impulse from there down to the lows. Now it's all about, have we seen the bottom, or are we going to see continuation? Structure-wise, you can see we've done enough. We have an A down, nice choppy B wave up, A, B, C down towards 74. So structurally speaking, we've done enough. But I, again, am looking more towards the longer term, and the longer term says to me, you're more than likely going to see a short-term rally, short-term pop, and that pop's going to fade, and this is going to be more advanced head and shoulders for the higher time frame. When you zoom out, again, you can just see how overextended we are. Really, I'm not interested in these equities at these levels. It's so risky. And if you really want to play this, playing it via kind of call options is probably the only way to play it that can limit your risk. And just be prepared for those call options to expire at zero. So use that amount of money to buy those options. Use that amount of your account to buy those options, knowing that there's a possibility, a very real possibility at these levels that they will expire at zero. But the upside could pay off for you. So I think that's really the best way to play a lot of these shares, is just call options and some straddles in something like Facebook. Straddles in Apple, I think, would work very well. Straddles in Amazon could work really well. So yeah, tech stocks, I think just being really cautious and using options to your advantage could work out really well. Boeing, again, the kind of airline mixed picture continues to play out. We did see a nice strong rally to the upside, which is exactly what we were looking for. You have an impulse up, ABCDE impulse up. We're now looking for this to continue and chop all the way down back to these lows. In terms of trade, really difficult to have conviction on this trade to the downside. I'd rather wait and maybe get long in this 190 region to trade this as a structure that we believe it to be, because right now we believe it to be the structure, but there's really no conviction that this is true right now. All we have is a really messy A wave, but it does follow everything we want out of an A wave. We've got a 1, 2, 3 up with an expanding triangle in the middle. Now you want to chop back down to the lows in a very B wave fashion. Then you can start to look for that long back up to 220, and then look for the short from there down towards kind of 170, potentially beyond that. So it's a mixed bag, but it is tradable, very technically trading, very technical trading. But right now, I believe patience is the only way to play this. Alibaba continues to look pretty bearish. We continue to see this move down. At the very least, we should go test these lows at 211. Structure-wise, still kind of uncertain as to whether we saw a corrective structure complete, we saw an impulse, and now we're correcting down to the downside, or we still have this running flat in play, and this kind of final impulse to the downside is going to put this running flat in play in a big way, and we get that run to the upside. So you really have to be open to both. Right now, I'm open towards this because of the nature of the waves. In terms of a longer term short trade, I would need to see this previous impulse to the downside start to get a little bit choppy, and then we can start to look at a much bigger A, B, C corrective structure for continuation to the downside. So I'd need to see this B wave get way more choppy in this region before pushing down again and popping higher. So again, patience is the game at the moment. There's no real moves that I'm seeing there. Bank of America, same thing. We just maintain that viewpoint where we're looking for the short, we're looking for the correction, we're looking for the move down, we're looking for the correction, and then we're looking for the short. Right now, we just continue to rally down, chop up, rally down, chop up. So one of those rallies down are going to turn into correction, going to turn to continuation for a much deeper trade to the downside. Right now, if you're looking for longs, I believe you're picking up pennies in front of a steamroller and you could get hurt. That being said, as you can see, pretty decent rising wedge in formation at the moment. We might see this break to the downside, and that could be the start of our move. So we're keeping an eye on this. But again, patience, no trade for me there. Berkshire, every time, again, it starts to look like we're pushing down, we just have another impulse to the upside. So at the moment, you really have to look at Berkshire as just completing an expanding triangle as a structure. Impulse A, B, C, D, E, impulse to the upside, a lot like Starbucks, which we'll get to later, where we had that expanding triangle at the end of the structure. Upside, I don't think we're going to get all the way up there. If you look at the length of the correction, it's a little bit short of what it needs to be for maximum upside. So we can lean towards a 0.618, more like a double top in this region before we see that downside. So that structure is really starting to play out. It's a lot like an ascending wedge into the highs, but just a lot more uncertainty. It's like an ascending, expanding triangle up into the highs, and then you can expect to turn down from there. Again, higher timeframes, nothing's changed. Still expecting a decent dip from this region, especially because of where we're sitting on the higher timeframe structure, and the possibility that this little move down was the start of an A wave, and we can expect something similar down the line if we have the previous structure wrong. So again, really struggle to look to find any conviction for long trades. I'm more inclined to be patient, wait for a move to the downside and a corrective structure that says, yes, it's time to get short with conviction. Beyond Meat, little short trade continues to look good. We are a little bit overextended, so you can expect a little bit of a corrective rally here, maybe a collective structure, but I still believe 40 is the target for this move. If we look at the previous structure, we can also expect this to just continue to the downside. As you can see, alternation-wise, this A wave to downside is long and drawn out. We can expect this move to the downside to continue with conviction or in earnest to the downside without much correction. It can very easily get to 44 without anything resembling a decent corrective structure. So just keep that in mind with the way you're going to manage your risk here and look for entries. Citigroup continues to rally. It's perfect for me because I really want this rally to go and touch on 82.60. I want to go break these highs. Structure-wise, that works really well for the structure that I'm looking for. But that doesn't mean I want to be long. I'm definitely not looking to be long Citigroup. We're already at a level that is of danger on the lower time frames. Higher time frames are still very bearish. So really all you're doing is playing this little bit of upside for a huge amount of downside that is in potential for the higher time frames. So just be really cautious looking for longs here. Again, it's the same strategy. I'm looking for a move down and a correction on the lower time frames that gives me conviction that we're looking for a short trade, something along these lines really, but one that's not going to stop. It's going to rally down. We're going to see a sideways move, and then this move is just going to continue to fade away to the downside. That's what I'm looking for. CCJ, Camco Group, really strong impulse off the highs. Again, I'm very bearish in the commodity zone because of that US dollar and what we're seeing. I think that reflation trade is mostly done. And what we're seeing in terms of structures is really playing out. Look at the MACD and these lines. You can see we're seeing a very, very clean structure with an ABC, which means it's an expanding flat, or very high potential, it's an expanding flat, and we can look for a very big move to the downside moving forward. So what we're looking for now, again, as with all the other pairs, in this instance, we've actually had our move down. Now we're looking for that little corrective structure that says, yes, further downside is imminent, and we can look for that moving forward. So we're keeping an eye on this week. Obviously, nothing too soon, probably Wednesday, Thursday. We may have some conviction to get into that short. Chipotle broken out of this little ascending wedge, or that ascending wedge, and we've seen pretty strong downside from there. Now we just need to be cautious, and like I said, this could be a good conviction for a long trade, a little bit of a hedged long, if we're looking for some long trade, something that we believe is going to gain some legs to the upside. So in this instance, we're looking for this little impulse from the lows to turn into something that has conviction to say we're going to go higher from here on the lower time frames. It's got good legs to the upside. If it does, we can expect something along the lines of, let's just see, in terms of length of correction. We're seeing that this corrective structure is long enough for this to be your impulse. So as crazy as it sounds, it is a possibility, and especially if we start to get that upside move, or we start to see that blow off top on the market, we can see Chipotle getting up towards kind of 2,000, 2,200. So this is definitely a long trade you want to be in, you want to be keeping an eye on. But just keep in mind, you're trading it against a backdrop of very bearish looking price action, a lot of other equities. So this could very easily just be a topping structure that is pushing more towards the downside. I'm just saying that because it's a good hedge against, and if we potentially have that bearish case wrong, Chipotle will make up for that if we get the right entry and we look for that bull case entry, that long entry. If it does play out, it will more than make up for our basically bearish bias that I'm holding at the moment. So this is a nice hedge and definitely one worth keeping an eye on. DraftKings, another one that's dipped strongly off the highs. I believe we're going to see further downside here. Little worry about this one is that if you move the structure one forward, you can see how it's a very, very clean ABC structure. Even that being said, though, you can expect further downside to come and probably test $40 at the least. So if we have this as the structure, we've gone to test the highs on a choppy wave, and we can expect deeper pullback than that. So both of these look to go at least to 40 and potentially below. So I'm still happy to look for shorts on DraftKings. We've had a nice move off the highs. Now, hopefully, we can start to see a little bit of a structure that indicates further downside. Nice little corrective structure for downside, and then we can look for those shorts. Disney is another one. We've had a nice impulse. We've potentially had our first little corrective structure here. As you can see, this little rally up to the highs. So, and we're opening pre-market up towards the top of that wave. So you can look at this as a little bit of an ABC. It's not the ideal waves. This B wave isn't as clean as you would like it to be, but there's also the possibility this converts into an expanding triangle, or develops into an expanding triangle, or a running triangle, or something along those lines. So keep an eye on this turning to the downside, and then you would start to look for some entry opportunities, because we do have, again, fairly decent looking head and shoulders top. EA is continuing to the downside. Structure still has more downside to come. So again, this is another one where we've had a really strong move. There was a decent little flag to trade here, although it was quite deep. And I imagine what we're going to start to see here is a little bit of a decent corrective structure over the next week, probably be here all week, if we can start to see a really stable market, if things start to stabilize a little bit. You can see how length-wise, that's the kind of correction you're looking for. So you're looking for the rest of the month, basically, to be in this scenario. if we start to correct from here. There's also the possibility that we just continue to impulse to the downside. In terms of alternation, we can expect a choppy move. A lot of these markets suggest a choppy move to the downside. So don't expect some big event where things crash. I'm more inclined to think you're going to see a realization that the market has got this inflation trade completely wrong, and more market participants are going to move more towards the deflationary camp, in which case we're going to start to see equities fade. And that's the kind of scenario I'm looking at, and that's the kind of scenario these charts are presenting. So again, we have that head and shoulders look to it. We may be looking to retest the neckline and then see more downside. So again, just looking for short entries where we find them. Expedia, higher time frame, still looking for that move to the downside as an ABCDE. Probably go close this gap. Higher time frame, we just had a little bit of a corrective structure, very small corrective structure, so we can expect upside to be fairly close by and a topping out. So we're looking for that topping out pattern. And again, you can see that little bit of a topping structure that it has, a little bit of a head and shoulders type look to it. So this is another one I'd be very interested in the short. As you can see, we've just made new highs across the board. We've moved a long way without a decent corrective structure. As you can see, daily, we haven't had a daily correction basically since March 2020. So you can expect a little bit of a corrective structure, something along these lines to go and close this gap. And as small as that move looks, it's a 30-40% drop in Expedia. So very much on the lines of looking for a short trade here. Just have to be patient. So again, patience is the name of the game. Ford, another one, ascending wedge, still holding up, still believe downside is coming. I'm not going to get into too much detail because nothing really has changed from the previous videos. Still seeing downside there. FedEx Corp, still looking for our choppy move down towards 230, looking to be playing out. As you can see, lots of choppiness in here, but this will take a while to play out. We'll be here till at least next month before I have any conviction for the short. But again, you can see this head and shoulders type structure forming. Even without our understanding of structure, classic charting point of view, you can see that head and shoulders very clearly. FireEye, downside momentum is kind of holding up. As you can see, we were looking for this ABC to play out, and we're in a little bit of a danger zone now because we have had that impulse off the highs. We had our flat pattern. We pushed lower down towards our 0.786, and we're seeing a little bit of a turn. So very easily, like I said, a lot of these shares showing kind of bipolar attitudes towards the market. This could very easily push up towards 26 as a complete correction of this impulse to the upside. I'm more inclined to think what we saw before that was an expanding flat. As you can see by the structure, 1, 2, 3 up, 1, 2, 3 down, big impulse up. We should maybe even look at this as an expanding triangle, in which case we'll go and test $7 on the downside from 18. So that's a very big drop. So again, still looking for shorts. I don't have any conviction for highs or for longs unless this impulse gives us a little bit of a flag or a corrective structure. But again, it's not my favorite chart, so I'm more inclined to look for those elsewhere. Something like Netflix would be preferable. GDX is another one we can look for longs because of the structure. We continue to see this head and shoulders play out, this ABC running flat structure within that head and shoulders, and a retest of the neckline, a possibility moving forward. So we can go and test 35. So I like this as a long, obviously potential for more downside before that occurs, but I like this as a push up towards 34 and a short trade from that region. Chart's looking really bearish, but we could have that short-term push higher. A lot like those other trades, a lot like, let's say, Amazon. No real connection to GDX really, but the chart looks the same. We can see a short-term rally and then a strong dip moving forward. Maybe we see TLT start to get a bid, or we see bonds start to get a bid, yields start to rise or start to fall again, gold starts to catch a bid, GDX catches a bid, tech catches a bid, and all of a sudden that market move fades away and the fall falls out beneath it, and once again gold falls GDX falls, tech falls. That's kind of what we're seeing in that Amazon chart. So see how this all pieces together. But I really like this chart as a short. I have no conviction to get long in this region. I'm already holding shorts in gold that are performing really well. I may need to hold on to a little bit of pain, but I'm in this for the long run, and I still believe there's a lot further down in gold to come. Goldman Sachs, same strategy. We've had an impulse off the highs. Now we're looking for a little corrective structure. Until we get that, I have no interest in any of the longs or shorts, but I'm really interested in the short. Just a reminder, monthly chart all the way out. Big move to come to the downside, in my view, in these financial charts. So just be really, really cautious being in finance at the moment, and be very cautious about being long any of these financial stocks. As you can see across the board, these financial stocks are looking like they're ready to turn to the downside in a big way, and there's a big move to come. So just be cautious. And again, even on this lowest time frame, starting to see a little bit of a topping pattern. So again, we're looking for those short trades, looking for this to pay off for us to the downside. No longs at all. Nasdaq Biotech, impulse that we were looking for a correction to short. It's just come a long way off the highs. Maybe we start to see that from down here. Again, you can see a little bit of a head and shoulders there. Massive head, small shoulders. We may be seeing the right shoulder forming now. Higher time frames, as bearish as ever. Still expect more downside. Still expect this to get some legs to the downside. Just struggling to find an entry. IBM still chopping sideways. No real conviction as to where to from here. Theoretically, like I've been saying, I would like to see this pop higher before fading, at least break these highs at 136. Obviously a possibility if we're seeing the same thing in Amazon, GDX, and the like. So it is a possibility. But again, I'm not looking to get long any of these. I'm more inclined to look for the short, more inclined to trade this little flag to the downside if it does break to the downside. It's been a long drawn out flag. If you look at the hourly, we've been here for a while. We've been here since 22nd of January. So if this does break to the downside, it should get some legs. Struggling to get upside momentum, which is a little bit of a warning sign. So yeah, again, I'm not looking to get long. I'm looking to get short. I'd rather get short at 137, 140. But if this breaks to the downside and gets legs, I'll have to take it as it is. Intel, zoomed out, another one that looks really good for a short. Structure-wise, very, very clean. Started to get some downside momentum as well, as you can see, and potentially going into a little bit of a corrective structure over the next few hours, next few days. This is potentially a really, really good short entry if it does start to give us that look to it. Again, you can see that head and shoulders top structure. Market's opening pretty bearish pre-market, so I really like this as a short. So you can see how many of these individual equities are looking like short trades. So I'm really struggling to find conviction for that long, and I'm really starting to see a bull trap forming on those indices. Johnson & Johnson, we were looking for a push higher. It dipped a little bit lower. Structure still holds. I still see a little bit of a push up and then a fade of that push, probably from this 160 region and further downside to come. So there's another one that's looking like a good short rather than decent long. If you were looking to get risky, you can trade this short-term long, but I'm more inclined to wait, to be patient, find those shorts, because we could turn at any moment now. We're very close to have done enough to the C wave to really turn to the downside. JP Morgan, another finance or financial stock that I'm really bearish. We've had a little bit of a push off the highs. Now we're looking for a little bit of a corrective move to give us conviction for the short. And again, as you can see, looking a lot like a head and shoulders. So be patient, and there's no real room for me to be long here either. Live Nation, broken out of our ascending wedge, starting to get a little bit of legs to the downside, hoping that this is what we're starting to see now, nice and close to the top. Is this corrective structure? We can look for the shorts. Higher time frame, still looking good for downside. Downside target probably around about the $30 region, 30 to $40 from 89 where it is now. So very, very big move to come on the downside. It should be low and slow and choppy, but we should just continue to see that downward trend start to solidify. Breaking out of this wedge is our first step towards finding a good entry. Now we wait for this corrective move. Triple M, another one that looks bearish. We've had our structure play out really nicely. We had this move to the downside, just went to go break these lows, did enough. Then we had our move to the upside. So it's done exactly as we wanted it to do. And as you can see, pretty high wick to the upside from Friday's close. Now we can expect some downside. So we're looking for that move to the downside to kind of solidify. You may see this get a little bit choppy though, because structure-wise, we're missing away to the downside. So we should, let me just see, impulse down, A, B, C, D, E, impulse down. No, sorry, I'm wrong. We do have a complete structure here. We have a nice flat with an expanding triangle in the middle. And we can now expect a continuation to the downside following this lower degree structure. Higher time frame, structure looks good in terms of a complete structure, and that big impulse of the highs has really struggled to find any conviction that we're going to see further upside following a move like that and a corrective structure like that. So I'm more inclined to believe we are heading down from there. So bearish outlook once again. Morgan Stanley, another financial stock, still looking for this move down, still looking for the correction. Higher time frames remain as bearish as ever, and we're at a very interesting level. This could pop higher, but again, I'm not interested in any longs here. I'm more inclined to look for the short. So just about being patient, waiting for that short to come out. MicroStrategy continues to look pretty bearish, especially with Bitcoin kind of struggling to stay above 50,000. As you can see, structure-wise, not too bad, not my cleanest structure ever for a short. But it is a possibility that this is what we're seeing at the moment. So just wait and see how things play out. You might see this develop into an expanding triangle, get a bit choppy, and then see downside from there. But as you can see, we're a long way off the highs, already kind of 50% off the highs. And I still believe there's more downside to come when you look at this higher time frame chart. We don't use Fibonacci much, but you can see we're touching on the 0.618. So maybe we've bottomed, maybe we see upside. Maybe you can look for longs here if you believe in the MicroStrategy thesis. I think this has got a lot more downside to come though. Still bearish, cautious. I wouldn't say bearish Bitcoin, a more cautious Bitcoin. I'd much rather take some profits and wait to see what price action does in this region. And if we start to see that upside continue, then get back in with some funds. But right now, I'm happy to be on the sidelines, just waiting to see how things develop over the next few days, weeks, months ahead. I definitely don't want to short Bitcoin. I'm not keen on getting into margin on Bitcoin because of the volatility. But it is possible that we are at the top of a market, and then there's a possibility we're going to go see 20,000 on the downside, in which case, as you can see, in terms of head and shoulder structures, MicroStrategy may be a part of that move. Nvidia, this is one, if you are looking for longs, that could really pay off in terms of longs. As you can see, we've had a nice, clean, corrective structure play out as a expanding flat. Quite a mild expanding flat so far, with a nice candle of the lows on Friday. So if you start to see sustained upside here and maybe a flag, a corrective structure, I'll be inclined to take this to the long side. So there are a handful of decent looking longs, something like Chipotle, something like Netflix, something like Nvidia that gives us conviction to look for longs and maybe hedge our short bias that we have at the moment. So this is one of them that I'm very keen on to look for a long trade, and maybe even at a good level to look into a straddle if you are interested in something like that. Pfizer, just a reminder for Pfizer, we're looking at, again, it's that kind of mixed bag we're looking at. It's either a running flat for upside, which I'm very interested in because we should at least go test 43 to the upside. There's also the possibility that all of this is part of a corrective structure triangle and just continuation to the downside. So it could go either way. Again, straddle, not such a bad option. Right now, I'm looking for this little push off the lows to develop into a corrective structure that indicates further upside. So I can trade this as a long trade. Pfizer would definitely be one I'd want to be in if the vaccine narrative starts to take hold. You can really see this get some legs to the upside. So I'm keen to lean on Pfizer as a hedged long against my short bias again. Riot, definitely still in the short camp for Riot. Structure-wise, looks really good and prepped for a really nice move lower. As you can see, we've had an impulse off the highs. We've gone into a pretty decent ABCDE, a lot like MicroStrategy, where we could expect a lot of downside following this move. So if we do see sustained downside, our downside target on this is around about $3. So lots of potential downside on this from sitting at $40. So I like this as a short. We can expect a little bit of a pop higher, but this is something I wouldn't mind getting some longer dated put options in, especially following this little bit of a consolidation. I know it's when I say it's a little bit of a consolidation, but you're looking at kind of 20% moves, 40% moves within that consolidation. So you have to just be cautious about what price you're getting for those options, but they could really pay off if we go down to $3. So just keep that in mind. Ross Stores continues to push down from the highs. We're looking for this corrective structure, maybe starting to see that now. Higher time frame still pretty bearish. Still believe we're going to see the very least 55, depending on how the structure plays out, but we should see a really good move to the downside at the very least. So definitely not something I'm looking to get long. As you can see, pretty much a good double top structure for those that are more in line with classic charting, but looking really good for continuation to the downside, especially on a break of this little trend line. And you may even start to see a right shoulder developing at the head and shoulders. Save Spirit Airlines, we did say trading this little wedge to the downside could pay off well for you. You're taking on a little bit of a pressure in price action to the upside now. But as you can see, I think there's conviction to hold on to that short for a little while and maybe start to see this get some legs to the downside. Higher time frame structure is still very messy, so I'm not going to get into that. But given how overbought we are on the lower time frames, I think it's worth holding on to. You may see this double top. You may have to take some pain, but I believe holding on to this could pay off as long as you've kept good risk reward. And if you do lose out on this, if you do get stopped out, your stop should be at least 42, maybe 44, kind of a wider stop to give you that room to breathe. But if you do get stopped out, you should just take a 1% loss on your capital. It's more of a higher risk trade, which has good potential downside. You should get at least 3-4 to 1 on the downside if we do see what I want to see out of these markets. Starbucks, we mentioned it earlier. I think it was in Camco, where you had this expanding flat, broke up to the highs, broke the highs, and now we're starting to see downside. So I'm still waiting for this corrective structure that says more downside is coming. But the higher time frames kind of work for me here. As you can see, we can expect further downside here, down towards $70. I don't think it was Camco. You'd have to remind me what it was, but you get what I'm saying. It doesn't really matter, but those expanding triangles can occur near the highs. I think it was Expedia, actually. These expanding triangles can occur near the highs. Just go and break the top, and then you see downside. And again, you start to see kind of head and shoulders type structure developing when you see that kind of price action. So downside, again, I'm leaning more towards shorts than longs. Seagate, broken out of our little rising trend line, expecting more downside. At the very least, we'll go to 65, but there's still that potential that what we're seeing is a move on the higher time frame, which means our downside target is closer to 30. So again, one of those trades that has really strong downside, something you really don't want to miss out on if you can get a good entry. A little bit of gap here, which might close. You might see a little bit of a double top, triple top, however you want to look at it. But I still believe we're looking for downside trades rather than longs. AT&T, very interesting price action on AT&T. I was really expecting this to get legs to the downside following the end of our structure. that we saw here. Impulse up, chop down, impulse up. That being said, we did say that there's a possibility this is developing into a bit of a triangle. And that is also a possibility. It's also possible that it is a flat pattern. You can look at it as a contracting flat. And what we're seeing here is just a more complex corrective structure for downside. So however way you look at it, I still believe we're looking at downside. And again, if you want to look at it this way, I'm seeing a continuation head and shoulders. So we may see a little bit more upside, go test that neckline at the top. There's a lot of structures here that indicate downside. Can we look at it as an inverse head and shoulders for upside? I don't believe so. When you look at the higher time frame structure, I just see an impulse, a corrective structure, and then impulse to the downside. So lots of opportunity, lots of possibilities as to what it could be. Right now, just look at it as a triangle, A, B, C, D, E, in which case you would draw in the BD trend line, and this is going to get legs to the downside upon completion. So again, I'm looking for shorts. I don't see any real conviction to be long right now, unless I would trade this as a kind of, I guess, a classical charting hedge, where you get an inverse head and shoulders, you go and break the neckline, you get a retest of the neckline, and then I'll look to get long. But you really want to be long with conviction AT&T. I see very few scenarios where that is a likely scenario. So again, I'm looking for shorts. Twitter, we were looking for a little bit of a flag to trade to the downside. This was a high risk trade, but paid off for you. Very much kind of part of our flag strategy, where we have that really overbought hourly chart. You look for those short trades with a wider stop, and they end up paying out for you really well because of those overbought conditions and the higher degree structures aligning. In this case, they would have played out really well. Now we're looking for something along these lines, corrective structure for continuation to the downside. Still a little bit of a gap there, which gives us conviction for further downside. Higher time frame structure still looks good for downside. Impulse, correction, impulse, sitting off the highs of that higher degree structure. And if you go into the weeklies, even that structure looks good. As you had this big chop down, 1, 2, 3 up, big potential move down to go test the lows of 13. That's kind of speculative because of the surrounding structure. It's a bit of a guess, bit of a gamble, but this lower degree structure still works for me. I still think a correction here will be a really good short. And you could find a pretty good entry if things continue this way for the week. Visa, looks like we're getting a little bit of a correction. Again, it's not ideal, but that looks pretty good to me. You can see how choppy that D wave is. You can expect a little bit of a topping out here. As you can see, candle-wise, we're getting a good indication, first signs that we're going to see a turn to the downside. Nice little ABC. This is exactly what we were looking for on a lot of these pairs. Good impulse off the highs, nice corrective structure. Now we're looking for that short trade from this region down. In this instance, our downside target is quite a big one. We want to get down towards kind of 150 on the equity because of the surrounding structure. So I like this as a short trade. And you could really see this getting some legs. Again, seeing the same kind of topping structure. Could be head and shoulders down the line. Just struggling to break through these highs at 215. And eventually that pressure is going to come in, and we should see that downside really kick in. So Visa's one to keep an eye on this week for potential shorts. Even today, you may see that short. So looking for entry now. ExxonMobil kind of went a lot higher than we thought, but when we look at oil, we look how overbought it is. I think we're at the top of the structure. I think the downside is imminent. I'm already short oil. I took oil on that flag strategy, that overbought conditions with the higher structure that looks good. So I'm short oil now. I believe ExxonMobil is going to follow oil deeper down. I believe we're near the highs. All these last little moves have all been on OPEC news and potential sabotaging of pipelines and storage facilities, etc. That news tends to unwind fairly quickly in the oil market. And once that news unwinds, we'll start to see that continuation to the downside. This is also part of my bullish dollar thesis, also part of my overcooked reflation trade thesis, also part of my US equity short trade thesis. So a lot of things lining up for this short trade. And as you can see, even on the hourlies, just really overcooked. We haven't had a correction since 29th of January on the hourly chart. So that just goes to show that we're in a position to really start to look for those short trades. And you probably find what we're seeing here is resembling a rising wedge that may break to the downside. So I like ExxonMobil short. Zoom, one of our short trades that has played out really nicely and should continue to play out really nicely. Nice impulse off the highs, nice long drawn out ABC running flat, big impulse off there, bit of choppiness in between that. So you have to contend with some volatility, but the downside still looks good to me. So continue to look for those shorts to the downside, continue to look for this to move towards probably 200. So again, there's quite a big hefty drop to come. We've moved quite a long way on the hourly without a corrective move. So I wouldn't mind another little corrective structure to get into some downside down the line. So cool, guys, that's it. That's the update. As you can see, that bearish outlook remains. I don't see any real conviction for longs, although we do have some really nice long setups that can hedge against our current outlook. Something like Chipotle, really good long that has potential. Something like Pfizer, really good long that has potential, that can really help us if this short thesis that I have, this bearish thesis that I have, starts to turn on me. At least I'll be covered on the other side. So yeah, keep an eye on those trades. In the meantime, we're looking for those shorts, and I have a particular interest in those financial stock shorts because the finance sector to me looks like it's in a lot of danger for whatever reason. So we're keeping a close eye on that over the next few days / weeks / months even. It may take a while to play out, but when it does, we have a lot of downside to come. Cool, guys, have a good week, and we'll catch you in the Traders Corner if you are a member. If not, why not? Join us. There's lots of money to be made. The markets are looking ripe for some really good conditions to make some big profits. Have a good one, guys. We'll chat soon.